G'day, Binanceans, and welcome to this week's episode of Binance Beach. This week, we've got a super special guest here to talk about whether or not crypto can work if the number doesn't go up. Bit of a strange way of thinking about it, but yeah, I've got the best bloke to chat through that idea. Bernie, welcome to the pod.
Liam, thank you for having me. Great to be here.
Fantastic.
I look forward to answer that question.
Yeah. Now, you're the founder and CEO at Stables, which is a stablecoin wallet. So you're very familiar with the world of stablecoins. But that's what we're here to chat about today. But before we dive into the rabbit hole of coins that don't go up or down in value, we're going to check in on our Bitcoin price this week. We're having a pretty solid week. We are up nearly 12% from about 60,000 to 67 in US dollar terms. So we're on a bit of a tear this week. Across the altcoin market, we're also seeing some pretty solid gains in ETH at 9%, Solana at 7.5%. Doge has had a cracker week at nearly 30% up. And the Fear and Greed Index, which we track on a weekly basis, has jumped from, I think we were down at like 35, 37 last week, up to 58. So clearly a lot more optimism in the market. How are you feeling about H2, Bernie? Are you bullish or are you bearish?
I think it's time to get bullish. I'm incredibly bullish on all things crypto, especially also the things that don't necessarily go up all the time. So just directionally bullish.
Directionally bullish. Well, let's kick into it. Let's start with a really simple question. What is a stablecoin?
Yeah, I mean, I think like stablecoins in lots of instances are misunderstood. When I talk to people about what I do, they ask me, is like, oh, so is it like Bitcoin? I'm like, not quite. I think like the easy way to think about it is just, a digital representation of a dollar. Now, it doesn't necessarily need to be US dollar denominated. It could be like, all sort of different currencies. But basically, I think like that's a good mental model to have, like a dollar that you would have in your bank account now can live digitally in your crypto wallet or on a phone. I think there's also like three different types of stablecoins. Like not all stablecoins are created equal. There's like fiat-backed stablecoins, which is like effectively back one-to-one with fiat currency in a bank account or in different type of instruments. There could be like algorithmic backed stablecoin, which are yet to be proven functional, such as your USD, Terra Luna type of stablecoins. And then there would be like the more, I think, esoteric stablecoins that might be backed by a basket of assets such as real world asset, DeFi, or whatnot. So it's good to have like I think that differentiation of when it comes to understanding what stable coins are you using, what are you buying, so that you better understand what are the risk and the profile that you're getting exposed to.
So what is the point of these tokens? What are the use cases of stablecoins?
Yeah, I mean, I think it's like originally stablecoin, they were born out of the necessity for crypto native to escape volatility. Like you notoriously being the market, you're seeing Bitcoin went up 11%. That's probably at times, the performance of on the best year of a stock index. So what I'm trying to say is like, this industry is very volatile, and at times you need to find ways to escape the volatility and put your asset into something that is not, or up and down as, could be like crypto assets. So I think they were born out of the necessity for people to effectively take some chips off the tables. And also like, I think like mostly were used early in the days as well to maybe go max long on certain things. Like if you didn't have enough volatility, you could go and use stable coins to go and use, like decentralized exchanges to access like perps or derivative products. I think now we getting a bit deeper in the adoption cycle with stablecoins, with really being probably the first product to get product market fit. And you see that by the fact that like the profile of users have changed across the years. So I think like you go from like a very strong base of crypto native people utilizing stable coins for, you know, as I said, escaping volatility or accessing even more volatility, to now like what I call like crypto agnostic people. So people that they're utilizing stable coins, not because they're crypto native, but more so because they need to utilize stable coins into their everyday life to get better outcome. So I think a good example, it would be, you know, people in emerging economies, such as Argentina, places in Africa, Southeast Asia, where you have these very highly devaluing currencies, and there is a better way to escape, you know, those type of issues. Back in the days, you know, if you were a person from Nigeria, for instance, for you and go get US dollar, it would be a very hard and long process of having to go and find somebody to accept US dollar. Probably you have to go to the black market. And then once you have the US dollar, you store it under your mattress, type of things. Now with stable coins, I think like the accessibility and the ease of storage of these, you know, like less volatile fiat currencies become a lot easier, which is also why now we're seeing like this incredible adoption in stablecoin, especially in emerging markets.
And that's a fascinating trend. I think prior to 2021, we saw a lot of positive PR for Bitcoin coming out of emerging markets, right? It was a sovereign asset. It was censorship resistant. It wasn't cash. It couldn't be as easily stolen or identified. And Bitcoin was something that users in those kind of markets turn to as an inflation hedge. But obviously, Bitcoin is a more volatile asset. It's also a really complex asset to understand. And so I think post 2021, as we've seen the rise of stablecoins and their product market fit, we've seen a lot of traction in those emerging economies for stablecoins. And I think they've almost taken product market fit away from Bitcoin in some ways, which is a fascinating thing to watch. I think, yeah, like if you're sitting in Argentina or, you know, in Africa or in Turkey, and you're in a country where you need to protect your purchasing power, but you don't understand Bitcoin, everybody wants the US dollar. It already has mass global demand. And so that's a fascinating trend, I think.
Yeah, 100%. I mean, I also think there is, as you correctly touch on, I mean, there still is an education gap that needs to be closed into why Bitcoin is good and better than US dollar. Because actually, I mean, I could make the argument, although I run a stablecoin business, that if you look at the chart of US dollar depreciating versus Bitcoin, then you should know which asset that you actually want to own. But, you know, like we're still in a world where, you know, the US dollar is the predominant you know, economic force, and effectively everything at the moment is settled against US dollar. So like in the fiat world, US dollar is the currency to have. And it's really like an empowering tool for, you know, some people in this emerging economy. Just because, you know, like we self-ingrained, you know, at the back of our brain that like the US dollar is worth something. Bitcoin is still probably very early on and in its infancy in the, you know, in the cycle of being recognized as, you know, mean of exchange type of asset as well. Yeah.
Yeah, and you think about the most basic definition of money, and it's a store of value and a medium of exchange. We could go down the rabbit hole there, but in many ways, stable coins and Bitcoin complement each other perfectly as a combination. And using Bitcoins and stable coins, I think you can already go bankless. And with tools like Stables and what you guys are building, you have the ability to use Bitcoin as your store of value and use Stables as your medium of exchange. And obviously that market is so liquid on Binance and on other places that it's so easy to trade between them instantly and pretty cheaply. So let's look at the major players in the market. Let's look at some stablecoin issuers. We've got this DeFi Llama dashboard that I'm going to pull up. And yeah, we've got USDT, USDC, DAI. Tell us a little bit about some of these major players and issuers in the stablecoin market.
Yeah, I mean, I think it's that's the interesting one is like this. It seems to be a clear choice of winner, when it comes to stablecoins. But just by looking at market cap, I think there's some nuances around that, which is like, where are certain stablecoin winning? Which I think that's an interesting, like even bit of information to just delve into and understand why. So for instance, I think Tether, it's really winning in emerging market. Like people these days, you can pretty much go and pay Tether almost anywhere in, like the deep south. People will like accept that as, like US dollar. I think USDC is more the coin for the Western world, called like US, Europe, or maybe the older world. I don't know what we want to call it. But it's like, they have the impression of being the more regulated, more compliant stable coins out of the two, which also might be actually playing a factor into why one is more adopted than the other. Like, some people say opacity is a bonus in certain economies. And especially like, I think it could be in some economies where, people have been burned by, call it like direct relationship with the US, there might be a bit of distrust in something that like comes straight out of effectively, call it Goldman Sachs and BlackRock versus something that is issued, like in more opaque jurisdiction. But it's, if I'm not wrong, actually Tether is the third biggest holder of T-bills, which is not like, a government entity. So it's really staggering the amount of scales they got and, the amount of T-bills they actually hold on balance sheets. And that is like, I think that an interesting one up and coming would be like, Ethena USDE. If I'm not mistaken, it's like the fastest growing stable coin to be issued ever. They went like into the billions of dollars within weeks of effectively, launching it. And then there's like, the Maker DAO DAI Sky now called, which is like the more decentralized, I think like version of stable coins, which is also fascinating to kind of, think about as a stablecoin asset class, which is like the type of asset that pays you effectively, like call it native rates just by holding it. So yeah, lots of very cool projects out there. And I think like also a lot of choice for people in terms of, where do I want to place my money and what do I want to get out of my money, but also different type of risk profiles.
Yeah, and that's a great point because diversification and risk management is a key part of portfolio management for anyone, regardless of whether you're holding stables as a medium of exchange or whether you are actively trading. Can you talk to some of the downsides and the risks of holding stablecoins?
Yeah, I mean, there might be some like really, I think it's like mainly would be, I say, a couple of risks. The biggest one, it would be, the peg risk. So as I was touching on earlier, there's different type of stablecoin and these stablecoin different type of backings. Should one of these call it underlying asset not being of a good quality or effectively not readily available when there is a demand to withdraw, like effectively the market might misprice the price of this digital dollar from one and deviate it to, a different value. So I think like the biggest one that comes to mind was like, Terra USD, algorithmic stablecoin, so actually not backed by fiat. And it basically went to zero once the debt spiral started coming into play, which was basically mean there were more people trying to redeem that version of US dollar than people actually wanted to buy. The back in there was like a highly volatile asset that effectively caused this, in fact, that spiral to just like crater the price of the stablecoin to nearly zero. But that also happens to, like more, call it like fiat-backed stablecoins. I think like most recently, shortly after this, Terra Luna debacle, USDC also had call it like a bank run, which saw USDC depeg from $1 to about 80 cents, and that was related to SVB, Silicon Valley Bank run that happened in the US. Tether, like many years ago, I think like 26 or maybe 2017, 2018, they also had almost like a hole in the balance sheet due to Bitfinex being hacked, and then they basically recapitalize, and managed to repeg Tether back to one. But there's always risk when it comes to holding assets in general. Stablecoins are not. Although their name says stable coins, it's like the risk is like 1,000 not stables. But usually, like making sure that you buy all the right stable coins that can always be redeemed for $1 directly through the issuer, that type of issue shouldn't, success. Another one to consider, I think, is like regulatory risk, which I think is a big one. Most of these companies, they spend a lot of time and money into risk and compliance. However, like you never know what could happen, like on some jurisdiction might deem your stablecoin illegal anymore. So, like all of these things is like stuff that you would have to hold in when, transacting with stablecoins. That being said, there's ways of mitigating this type of risk. I mean, it's like, just buy stuff that you're comfortable and you deeply understand. And, like also number two, hopefully it's like good, like buy stable coins that are coming out of good regulation, or hoping for a regulator to come and actually give clear guidance into what a stable coin is. And like, I think like mostly, like talking about the US, I think there's been talks around jurisdiction. And I really think that like once you have clear regulatory, like clarity on what a stable coin is, that's when we think now stable coins, like they are product market fit. But I think once we have that clarity, like the market cap is going to go into trillions of dollars. And that's how the US dollar is going to win effectively. Because you can literally put regulated US dollar in people's pocket and they will be comfortable with it.
Yeah, that's a great segue. This week, A16Z Crypto released their State of Crypto report, and a big part of this report was dedicated to stablecoins finding products market fit. This whole thing's worth a read. It's actually a really great take on the industry. But yeah, to speak to that specifically, there was a chart that they had. Actually, maybe it was just up a touch on the opportunity for stablecoins to strengthen the US dollar's position, as the global reserve currency. And, when you look at share of international payments, which is this little chart here, the US dollar is now less than half of international payments. The euro is taking up a pretty considerable chunk of that pie as well. I'd guesstimate that might be like 35%. And then a little bit of the yen and a little bit of the Chinese renminbi. There's a mouthful. But absolutely, like you look at the share of stablecoins, it's 99%. Do you have any thoughts, and I'm actually not super caught up on this, but around the micro regulation and the way they are changing stablecoins in Europe? I know that for some exchanges and some regulated crypto businesses in Europe, they're now no longer offering USDT pairs. They're now offering stable coins that are pegged to the euro as the primary trading pairs. I guess that's a challenge against the current market share of US dollar stable coins. And maybe that could be something which starts to challenge that almost reserve currency status of US dollar stable coins.
Yeah, I mean, I think it's like, so I mean, it's like regulatory wise now, I would say Europe, it's I'm European by background, and I always think about this meme of what the US has done in the past year versus innovation in the US versus innovation in Europe. I think in the US you got Starlink, Musk launching rockets to Mars. In Europe you have the launching a new water bottle cap that you can't unscrew it completely. Anyways, all I'm trying to say is like, like I think there is, like Europe has been pushing ahead with like some regulatory clarity, name MiCA in terms of like crypto assets and stable coins. As part of that, there's some, I would say, disclosures and, compliance measure you need to put in place to make sure that your stablecoins is actually compliance with those guidelines. Some issuers are more prone than others to follow those things. But I would say that if you look at the number, the currency share of stablecoins at the moment, it's all US dollar. Although euro on the traditional FX market is actually the second biggest FX pair. At the moment, the market, at least in our industry, all the one is US dollar. I think there is a big opportunity though. And this is like, some of the, I think like big thesis of what we do as stables, that there will be a time where on-chain FX is going to replace, call it like traditional FX. So, the ability to access currency from permissionless pool versus you having to go through permission institution to do these swaps, hopefully will change and shift, like to more decentralized ways, meaning that, Liam, maybe we're going to be living one day in a world where, like we're spending AUD in Australia, and whenever we go to Europe, we can just go on chain, maybe through products similar to stables, swap my tokenized AUD, if ever, to your tokenized version of euro, and then you'll be able to go and spend it in Europe one-to-one, and then like the conversion is going to be like best conversion you get anywhere is going to be basically interbank conversion. It's going to be open to everybody to plug into. So I think like those things pretty cool, but I still believe it's still probably a good 5 to 10 years away, just because all these non-US stablecoins, they need to build liquidity, they need to build use cases, and they need to build adoption before effectively people are going to be bothered to go and create this decentralized permissionless pool for everybody to go and access FX rates. I think good use case is going to be around businesses use cases, because business is going to be the one, especially like international business, the trading, like overseas. Think of it, maybe a Chinese business that buys beef from Australia, today needs to do a bunch of hedging and currency swap. If we're ever going to be living in a world where all currency is going to be on-chain and tokenized in form of stable coins, then as opposed to go to a bank, these people can go on-chain, do these swaps, access very cheap, call it like interbank currency rates, with no intermediaries in the middle, and then go settle with the farmer, for instance. So I think those use cases are pretty cool. But we need to see whether they're going to play out.
Yeah, and there was a slide in this report which blew my mind on, international transfers. Average cost to send US dollar via wire transfer,
Crazy.
$44, $12 via USDC on ETH in 2021, $1 in 2024, and then less than a cent on base in 2024.
Yeah.
Like, that is such a phenomenal product market fit. Such an incredible use case. And it's really hard to see the legacy foreign exchange and cross-border payment system keeping up with this level of market efficiency. It's kind of just
100%.
a no-brainer for anybody wanting to transfer any sum of money to any place, almost for anything.
Yeah, 100%. Yeah, I mean, it's like, but I think like the interesting part on international wires is like the reason why those things are so expensive is because there's so many intermediaries at the back and so much compliance that each and every one of these intermediary has to pay for, then that's why they're making this money transfer so expensive. If I'm not wrong, on the top of my head, I think the average remittance cost today is about 6%. Right? So I think the opportunity is not only on like sending USD internationally, it's almost like using USD as the liquidity in between different pairs, which allows you to give you much better rates, for instance, when sending money internationally. An example of that is, like we have these, through stables, you can send money to the Philippines. On average, you could go between, call it 3 to 14%. If you use remittance services through stables, it's like sub 1%, and it just it settles immediately versus like taking 1 to 3 days. So there's actually real benefits for the user from utilizing everyday users crypto agnostic, whatever we're touching on earlier, to utilize stablecoins versus normal rail, because you get speed, efficiency, and then you get security, because there's less party risk that you need to take. Because like sometimes people, I think people think about it. When you're sending money, you effectively have counterparty risk in the sense that, while money is in flight, all number of things could happen to your money versus you sending the money lands into destination, is done. So I think it's like, that's why stablecoins are now taking off, and they're only going to take off more and more, as I said, with more regulation, because this is just a better form of money. It's going to be the future of how we're going to be settling value globally. And, this is super exciting. Pretty cool.
I agree. I'm pumped for it. Let's pivot to an announcement that came out this week from Praxis Nation. They've raised $525 million to build the next great city. That's a pretty fantastic raise. For the uninitiated Binance Beach listeners, Praxis is the world's first network state. It's an online community with a national consciousness, developing a shared way of life, governing institutions, and they are now crowdfunding a physical city, which is what they've just raised for. If you haven't checked out The Network State by Balaji, that's worth looking up if you're interested in crypto and how it could help shape what the world looks like in the future. But I think this is a perfect example of that. And Bernie, I think it's a great segue into what the world could look like in the future with stablecoins and with crypto. Give us your vision for why this tech is here to stay.
Yeah, 100%. I honestly think that in the future, and it's probably what I basically said earlier, but I think it's I do believe in a future where hopefully we're going to be, and I'm pretty close to the network state ideology, almost like self-organizing smaller community that they have access to global money, better money, the settles move, and internationally, at a fraction of a cost, and effectively allowing everybody to access what we have the lack to access today, which is very good, stable financial infrastructures. And, that's not the case for everybody. Stablecoins in general, they really have the opportunity to go and change that and give us a more equitable, fair world, all starting from, the way that we exchange value and the way that we value our time, and the way that we can, save for the future and provide for our family. So, yeah, I definitely look forward to keep on building on the stablecoin space. I think we're just getting started. It's no better time to build in the stablecoin space. And yeah, it's showing now. I think it's in 5 years' time, it's going to be so obvious that people would just oh my God, how did I miss that?
Yeah, I'm super optimistic, not just for stablecoins, but for our whole space. I think we're onto a winner with tech, and it really is just a case of building the products, making the UX phenomenal, and rolling it out. So I'm looking forward to seeing you guys work on that, seeing us work on that, and to see this industry keep catching fire. So if you loved seeing Bernie on the pod today, we're launching a promotion as of pretty much right now. We are asking our users to help choose our panel. As you guys know, we are a title sponsor for the Australian Crypto Convention this year, and we want to give you the chance to win 0.5 BNB by voting for who you think should join us for a Binance Beach live session. So if you loved hearing from Bernie, you can log into your Binance account, vote for him or any of our other guests that we've previously had on the show. We'll also ask you to make some suggestions for improvement because we're user focused, and also suggest a future guest. And the best combination of those two suggestions is going to win 0.5 BNB, which is worth about 440 Aussie at the moment. So that's not a bad little bonus. So yeah, if you loved having Bernie on, and I certainly did, mate, this was a fantastic episode. We'll have you back. But yeah, thanks so much for joining Binance Beach.
Thank you for having me, man. Good to chat.
Awesome. I will finish with a disclaimer as we do every week, but please remember to like the show on YouTube, like our channel, subscribe to our channel, and yeah, let us know who you would love to see joining us. But please note this discussion includes insights from non-affiliated third parties and key opinion leaders. Binance provides this platform for informational and educational purposes only and is not responsible for any content or insights provided. This information should not be considered as financial, tax, or investment advice from Binance. I'll see you next week, Binanceans. Have a great weekend.